As you have seen during the day, the budget has resulted in significant amount of market correction, and especially in the mid cap and small cap segment. There are three reasons why the market has been disappointed with the budget. Number one, there it was expected that there will be some amount of consumption boost, either in the form of tax cut or some amount of consumption stimulus, but that hasn't fructified. The second thing, there was expectation that there will be some amount of tinkering with the capital gains tax, some lowering of capital gains, but that also hasn't come. Perhaps most importantly, the budget has increased STT on equity investments, and there has been some change on buyback, the taxation on buybacks. So these are the factors which seems to have disappointed the market. Also, the gross market borrowing of 17 lakh crore is something which the market perhaps was not expecting. But having said that, if you look at this budget actually sets in process a pretty progressive thing. Earlier years of budget, we have seen that there was some specific context to the budget. For example, to eliminate the impact of the pandemic, for example, to provide boost to GDP growth, for example, to carry out some kind of fiscal consolidation. But in this budget, the budget has tried to put India in the path of global competitiveness, and all the measures which have followed are beneficial for the country from a medium to longer term rather than in the very short term. And so eventually we think the impact of this budget will be pretty positive on the economy and the market over a medium to long term period. The things which are happening, the positive things, number one, if you look at the last 10-12 budget, the government has tried to increase the allocation in capital expenditure. As a percentage of overall spending, the capital expenditure, which was just about 12-13%, has now crossed 20%, closer to 21-22%. And this momentum has continued even during the current year. And we have seen there has been significant amount of increase in expenditure in areas such as defense, roads and bridges, railways. So these are long-term positive. Second thing, this budget has given a precise stimulus to some of the sunrise industries. For example, the artificial intelligence related areas, the data centers, electronics, semiconductors, all these areas which will have a long-term positive impact. Also, if you look at this budget, has tried to improve the conditions for doing business by allocating significant amount of fund and through various measures in the context of logistics, in the context of other areas which adds to the cost of doing business. So in that sense also this is very positive. Also, if you look at, there is a recognition in this budget that as well as manufacturing, services is a major part of the economy and we need to be competitive there. So whether it's in the context of REITs, monetization of PSU, land bank, whether it's in the context of tourism, whether in the context of education, whether in the context of training, this budget has taken positive measures. So overall, as I said, while the budget has disappointed the near-term sentiments both for consumers and more so for investors, from a medium to longer-term perspective, it's a very positive budget. One particularly important thing is that the net market borrowing this year is lower than the amount of allocation for capex. So India is no longer borrowing to fund current expenditure. Rather, India is actually borrowing to for capital formation. This is a big transformation, and this will have a salutary positive impact on the economy and the markets in times to come.